This is $1 million property that could get you $50,000 a year in retirement income. So with the help of my mortgage broker, Lisa, I'm going to show you how this is $1 million property, and afterwards you may look at all investment real estate in a completely different way. The real value of 964 Dunford cannot be seen from the outside, and if you take a tour inside, you won't necessarily see the real value there either. What we need to do is run the numbers. At the time of the making of this video, Dunford was listed at $499,000. There are 4 sources of income from the property. The main house rents for $1,285, the suite for $750, the garage for $350, and the suite above the garage for $725 a month. Total rent, $3,110 monthly. But it gets better.
It has great cash flow.
If you want to purchase this property with 20% down, you'll need $99,800. A current 5-year fixed-rate mortgage can be obtained for 3.45%. This means your expenses of mortgage payments and property taxes will total $1,784, plus another $200 a month for incidental expenses. $3,110 in rent minus $1,986 in expenses equals $1,124 a month in positive cash flow. So let's round that off and say there is $1,000 of income left over every month after all expenses on the property have been paid. Why isn't anybody buying this property?
Because they're crazy. Absolutely crazy.
So if you just take that money in as income and don't reinvest it or pay off further debt, you are receiving a 12% rate of return on your money right away. How does that compare to your other investments? But this is nowhere near how great this can get. It gets much better. But before we see how great it can get, let's look at how bad it seems to be. Mortgage interest is a huge expense when purchasing property. On a $500,000 home with a 5-year fixed mortgage at 3.45%, you'll end up paying $287,000 in interest over 35 years. So we want to drastically reduce those interest charges and quickly increase the amount of income you'll get from this property in 2 simple steps. We want to get you that $50,000 a year in retirement income as soon as possible. Step 1 involves changing your payments from monthly to accelerated biweekly, which means you'll have the property paid off in 30 years instead of 35 years. But we can do much better than that. Let's say you're still working and you don't need that $1,000 of positive cash flow as income. So step 2 involves taking that $1,000 and plowing it down on the mortgage, with all that extra money going straight to principal. By doing so, your total interest paid over the life of the mortgage drops from $287,000 down to $111,000, and the property will be totally paid off in 15.3 years. Let's step into the real estate investment time machine. 15 years from now, you still own Dunford, and the mortgage is totally paid off. Assume no increase in property value and no increase in rent. Dunford is still worth $500,000, and your tenants are still paying $3,110 a month, but you have no mortgage now. What kind of a retirement nest egg would you have to have accumulated in order to equal this rental income? $37,000 a year is the rough equivalent of having $1 million in the bank earning 3.7% interest. And at the time this video was made, the best rate for a 5-year GIC in Canada was 3.4%. By buying Dunford with $100,000 down, you could get the equivalent in 15 years of a $1 million retirement nest egg. Again, assuming no increase in property value and no increase in rent. So let's assume a modest 3% increase in rent. This would mean your total rent in year 15 would then be $4,230 a month. Multiply that by 12 months, equals $50,760 a year. There is your $50,000 a year retirement income. And that is equal to having $1 million retirement nest egg built up elsewhere and earning 5%. all for a one-time investment of $100,000. So, do you buy Dunford or do you invest your $100,000 elsewhere? In order to get your $100,000 to grow to $1 million in 15 years elsewhere, you would have to earn 16.72% on your $100,000 every year for the next 15 years. With Dunford, the property value doesn't have to go up at all, and the rent just has to be increased by 3% a year for the next 15 years. And guess who has control over whether that happens? So a 3% increase in rent, $4,230 a month, and that's basically, how much is that a year?
Basically $50,000 in income a year.
Mortgage is paid off.
Mortgage paid off, free and clear home, and you are making $50,000.
Finally, let's imagine your $500,000 investment property actually increases in value somewhat. At 1% growth, it would be worth $580,000. At 2%, $672,000. And at 5%, it would be worth $1 million in 15 years. So what's the bottom line? 964 Dunford has real potential to become your $1 million retirement savings plan. But it's better than that. Like an RSP, you make the initial contribution, which in this case is your down payment of $100,000. And you are then essentially taking out an RSP loan for $400,000 by getting your mortgage. But your tenants are paying off that loan for you. Do you need to start looking at investment real estate and your retirement planning in a different way?
Rick Hoogendoorn and Cheri Crause are real estate investors and real estate agents with Royal LePage Coast Capital Realty in Victoria, British Columbia. As former financial planners, they both have a unique perspective on real estate. Lisa Fibiger is a mortgage advisor with Dominion Lending in Victoria, BC. Make her your trusted mortgage advisor.